Good morning, everybody. This is your DAX setups for today. Well, now, what can we say about that chaos that we had yesterday? I'm not so sure it's over, but anyway, a lot was happening yesterday. Bank of Japan raised interest rates while Bank of England dropped interest rates. So most countries are looking to drop interest rates as everything stabilizes, but in Japan it's not the case, according to the Bank of Japan anyway. And then you had a massive attack on tech stocks, so lots of short selling on tech stocks. A lot of the tech stocks down 5, 6, 7, 8%. So it's all about AI, it's all about shortage of chips, a whole lot of things. And then obviously you've got the Feds in the US talking about potentially dropping interest rates in September. So lots of confusion, and I think if you just look at this chart from a distance, the confusion continues. We are in a zone that you would expect some buyers to come in. I'll put this other level in here. You definitely would expect buyers coming in the zone. As you look left, there is a little bit of structure, a little bit lower down as well. But after yesterday's chaos, as you can see, that was a massive move. 3% at the moment that we're down from the highs, and with zero warning at all. Anyway, this is not something I'd want to try and get involved in. So you're going to find a lot of people that are going to think, I've fallen to the floor, we're going to be short now and we're going to jump in. But that is exactly what a lot of the institutions are waiting for. They need volumes in order to drive the market in a direction. So what I mean by that is they need to set a trap. So this was perfect situation, because a lot of people with the breakouts, with what S&P was looking like, I mean, I was extremely bullish yesterday, and there would have been thousands, if not millions of traders that would have been doing the same thing, looking for the buying opportunity, jumped in, and then all it took was a couple of institutions to be on the opposite direction, just to drive price down with some sizable volumes until they start hitting all the stop losses, and then this is what happens. Okay, so it's a game at the end of the day. It's not really a real logic behind how the institutions do it, but and the institutions are the banks and people that have your money, that are investing your money. This is how they play with it to make their own money, and then they give you a little 5 or 8% return. But anyway, there's nothing really I want to get involved in here. I don't think there's no structure. If you look left, there's nothing. I don't even think there was a warning. Just look at this in the 50 minutes. Just look at the hindsight. See if there was something here. I don't think there was, to be honest. There was. Let's not call it a solid, because you would have expected price to come back exactly to the tail, which it didn't quite. Nevertheless, that was probably the only opportunity that you did have. But you can see with the noise that happened, you quick gap down and accelerate so quickly. That was almost 1.5%, well, 1.6%. There was no warning yesterday, as you can see. I mean, a lot of the stuff, when we were doing the video, we're definitely looking for an opportunity to buy, but I suppose we're a bit different on the DAX. I was looking for a breakout to the upside rather than find support at the downside, but on the S&P, it was definitely looking for a level which didn't materialize. Now, there's a couple of things at the moment. So you've got your moving averages that are very, very far apart. You've got your oscillators group to the downside. You've got a strong area of support. So there is merit for saying this is bottom of range, bottom of actually daily range. There it is there. but there's also merit to say that this is a big head and shoulders, so left shoulder, head, right shoulder, and take your pick where the neckline is. And then if you look at this bottom level at 17823, you see there's a massive daily gap there. So I would be very, very cautious about this. I don't think I really want to get involved in this. We're breaking trend lines as well. So for me, short setups could start coming into play, but not at this level. They'd have to swing higher and reject levels higher up. But when you look at it on the weekly, this is just one big, massive weekly range. This has happened before in the DAX, just by the way. We had a whole year of a range, which became such an easy setup to trade. You had the top of the weekly range and the bottom of the weekly range, and you were just buying and selling off that. It was a couple of years ago that happened, but it wasn't this volatile. So you could have half decent stop losses in. At the moment, your position sizes are so small, and your stop losses need to be fairly aggressive just to stay in the trade because of the wild swings. Anyway, that's enough rambling this morning. I think for me, it's just stay away from it. I'm not going to bother with this. We'll wait for next week, see if next week brings some calm to the market. I think there's still a whole host of earnings and there's a bit of data coming out today. So yeah, it could swing in the opposite direction, or it could break to the downside and just plummet. Yeah, could do anything. So I think I'd rather just wait for Monday and hopefully bring some calm to the market. Anyway, hope it helps you somewhat, and I will catch up with you tomorrow morning. Cheers for now.